Buying your first home in Huntsville, Alabama is a great way to build wealth. In this video, we're going to talk about how you can purchase your first home. But before we do that, make sure you hit the subscribe button below to stay on top of all of the latest Huntsville, Alabama real estate news. According to the US Census, homeowners have an average of 40x times the net worth of renters. That's $255,000 versus only $6,300 for renters. So let's jump into those 7 steps on how to buy your first home in Huntsville, Alabama. The first step is determine your budget. And a lot of that's going to be dependent upon you. It's going to depend on your credit, your income, and your overall debt level. But a good rule of thumb is the 28-36 rule. 28 stands for basically your house payment should not be greater than 20% of your monthly income. And then the 36 is if you add your house debt and then also any other debt, your credit card debt, student loan debt, that ratio should not be more than 36% of your monthly income. The second step is to get pre-approved. You're going to want to have that pre-approval letter because sellers are going to take you more seriously, and oftentimes it'll help you win or even be able to get into the negotiation game with the seller. So it's important to get pre-approved and know what you're qualified for. Also, if something comes up on your credit, it's important to be able to address that up front versus on the back end. We recommend looking at a local mortgage broker, and we like local mortgage brokers for a reason because versus a 1-800 number, if they don't treat you right, we can go look them in the eye. We can go knock on their doorsteps, making sure that they treat you right and provide you with that 5-star service. We also like working with local mortgage brokers that we do a lot of business with. And the reason for that is for accountability. They know that if they don't treat you right, they're not going to get that next client to serve from us. And when you talked about local mortgage broker, there's a lot of favorable financing options out there, especially for first-time home buyers. There's FHA financing, which is 3.5% down. There's VA loans out there, which is 100% financing if you're a military veteran. And if you are, thank you for your service to our country. And then there's also USDA loans, which is 100% financing. And you'd be surprised on some of the areas that qualify for what is considered a rural development loan. But when you go that route, you can get 100% financing and 0% down payment out of your pocket. The next step is to determine and plan for your closing cost. On average, the closing costs are between 2 to 4% of the overall purchase price of your home. Another great benefit of buying in a buyer's market or a market where there's slightly more inventory is that you can sometimes get the seller to pay for either a portion or all of your closing costs. And so if you're doing a USDA loan or a VA loan that's 100% financing, sometimes you can buy a home with 0 money out of pocket. Another great thing if you're concerned about closing costs or budgeting for closing costs is looking at shopping with builders. And we can help navigate some of the builders that pay for either a portion or all of your closing costs when you buy that new home. So now that we've got your budget, we've got your financing options, we've talked about closing costs and budget for that, the next thing to budget and plan for is your upfront and out-of-pocket expenses. So there's several things that you're going to need to plan for when purchasing your first home. The first one is earnest money. So this shows the seller that you are committed and serious about purchasing a home, and earnest money varies. Typically we see anywhere between $500 to even up to $50,000 on a purchase, but typically in a first home you're going to see $500,000, maybe $2,000 on that first purchase on average. So earnest money is number one. The second thing is appraisal. So this is one of your closing cost items, and so appraisal is something that helps protect you and the bank of not overpaying for that home. And so that's a fee that you need to pay up front, typically going to range $450, $600 or so. That is paid out of pocket up front. However, if the seller pays your closing costs, if you write the contract correctly, you can get that money reimbursed to you at closing. The third thing is your home inspection and termite. Now that's something that you don't want to have the seller pay for because you want the home inspector looking out for your best interest. And so you're going to want to hire a home inspector, and then you also are going to want to have a termite inspection because termites are bad in this area as well. And then the fourth thing is your moving expenses, your utility hookups. As a first-time home buyer, that might be a little bit less for you because you might be able to bootstrap that and hire a bunch of friends with a pickup truck and pay them pizza to be able to help move you into that first home. So you've got your budget, you're pre-approved, you know the area that you want to purchase in. It's now time to select a real estate agent. And we're in this review economy, so one of the best ways to find a great agent is to check out reviews. Don't take our word for it, check out our reviews, because you'll find that Matt Curtis Real Estate has thousands of 5-star reviews, and we're ready to provide you with 5-star service in buying your first home. It's important also to find an agent that's going to sit down with you and provide you with good advice to help navigate you through the purchase of that first home. So now you've selected your agent, you're out there shopping for homes, you find that dream home. Now your next step, the real estate agent is going to help you draft the paperwork to make that home yours. So some of the things that you think about in drafting that paperwork is, number one is earnest money. We already kind of talked about that. That is a deposit that goes towards the purchase of the home, and that gets credited back to you at the closing of that home. Number two is your purchase price. How much are you going to offer for that home? Your real estate agent is going to help provide what's called a CMA, a market analysis, to make sure you're paying the right amount and not paying too much for that home. Number three is your closing costs. We already talked about that. That's typically between 2 to 4%. You now should know what your closing costs are by working with that local lender. So your real estate agent is going to help estimate that, but really what matters is the estimate that your lender gives you for the purchase of the home, and that's your closing costs. And you want to also negotiate or factor in, hey, who's going to pay that? Is it going to be the buyer, or is that going to be the seller paying for closing costs at closing? But number three is the inspections. How long do you need to do the inspections? Oftentimes we see anywhere between 5 to 15 working days, so that's 1 to 3 weeks. So how much time are you going to give yourself and your home inspector to go through those home inspections? And then the next thing to be thinking about is your closing date. Talk to your local lender. How long does it take to close that loan? Sometimes a USDA loan may take longer than a conventional loan. How long do you need to close a loan, and how much time do you need personally to prepare your finances as well? What's typical is anywhere between about 30 to 60 days on average. Here's how you build wealth through owning a home. There's 4 key ways, and the first one's the biggest one, is through home appreciation, or what's really inflation. We're going to continue to have inflation in this country because the government's going to continue to print money. They have to continue to print money because of the massive debt load that they have. They've got to reduce the amount of debt that they have by having more currency out there in the marketplace. And so when you own hard assets such as homes, that's going to increase your net worth, and it's going to increase your net worth even more than a lot of other investment vehicles, because when you purchase a home, you can buy that through leverage. And so if you're putting 5% down or 10% down, that money is being leveraged, and so you're not only getting the value of the appreciation of your 5 or 10% investment, but you're actually getting the appreciation of the entire investment. So that multiplies and compounds your investment to a very high level. So the second big way is through principal reduction. So when you have a 30-year or 15-year mortgage, a percentage of that payment goes towards principal reduction, and that principal reduction portion grows over time as you continue to make payments. And so that is equity that you're able to tap into when you sell your home, or we'll talk about another way that you can tap into that equity here in just a minute. The third one is tax savings. The government is your business partner when it comes to buying your first home or even buying a rental property. And the reason they do that is because, one, investors are better at providing housing than the government is. And then the two is they need first-time home buyers, they need home buyers taking on mortgage debt to be able to provide and fund the government debt that they have. And so they're your business partner providing tax savings and tax advantages for you to buy your first home and buy your rental properties as well. And the last one is really, we're the envy of the world with our 30-year and 15-year fixed mortgage rate products. Your debt simply becomes worth less over time as inflation rates go up. All right, Matt, I know what you're thinking. I've got all this home equity now. On average, my home equity is $255,000 for a homeowner versus only $6,300 for a renter. How do I access that equity? Do I have to sell my home to be able to access it and buy another home? What do I have to do? And the answer is, of course, you can sell your home to access it. Or number two is you can do what's called a home equity line of credit, or do a cash out refinance to pull out that money to be able to invest in other real estate properties or even go on a vacation. If you're ready to start building your net worth through buying your first home, send us an email at moving@mattcurtisrealestate.com, and we'll make sure we provide you with that 5-star service.